Welcome to TradeTheNBA.com. This is John. This report is for the 3rd, and well, we've already started a fun month. We had a big move up, pulled back. We expect at least a third 50% retrace of big moves like that. In fact, we got it, and they cleared a bunch of stops, and then just brought it right back. What we'd been looking for was a crossover right here that's beginning to start on the day, even though it's under fading short-term buyers. It's significant. It's interesting that we look at it from our Morganacci standpoint here, but typically when you get a 50% retrace of typical moves, institutions love to get into those setups because it's, at this particular point, they got no other recourse but to buy the market since they have to find a yield somewhere. And from an NQ standpoint, still a bit weaker, but it's holding on. The readings are relatively equal from a DOC standpoint. It's just price variation simply because the outside move of the NASDAQ over the S&P has been real. And of course, gold still can't capture anything. It's a potential here if the orange dips down, but it looks like it's already starting to arc a little bit, which would be a continued weak negative. And from a euro standpoint, again, flat. Getting to the intraday, for fun, expand this. I went ahead and just filled in some of the setups that we had, from when we started the market, pre-market open, came down before a yellow marker. That's a good 20-point continuation move. Even if you bought there, it's relatively the same as what I considered from that steel dipping below the zero back up cross. Relatively the same, but that one produced, another 13 points. We had this little interim move, which really didn't do anything. It was still a nice dip down below, but we ended up with that steel going below, and there it is from the, actually I should just mark that because that's exactly what we look for. So the dip below the zero, back up above, and then orange dips below, and boom, you're off. So it's pretty straightforward from that standpoint. We started to get a few other broader short moves. Within those, you still had secondary moves, and that one stayed into negative mode for quite a while. Another 17 plus if you waited for it the whole way through. Here you didn't end up with the steel dip before the orange came down below, but certainly by the time it crossed over on a P2, that creates the blue candle right there, and that was the end of that decline, and that led to another nice 13 plus point move above before a new short began. And similar context, here's that dip right back to the zero line, and then the dip of the orange underneath. To give it a mark, it's a smaller move when you look at it from the start of this candle, which was what, 91 to 89. Not a whole lot there, but you're going to get those. And what you're looking for are these bigger runs. I mean, it's 26 points in the middle of the day there that then flips around and creates, so far 22 on the upside with cyan still underneath. And so, it's just a matter of consistency of it and taking advantage of all the opportunities that exist. Some are going to work out, some aren't. But when you catch the bigger runs and follow them, that's where the outside really returns take place, and it becomes pretty straightforward. I think that we can't complain about this. Volatility has been beautiful, and even though the market isn't making any new highs or doing anything spectacular, there's still plenty of range to provide just a lot of opportunity. So hopefully everyone's taking advantage of those unique setups. As always, though, I will keep posting them and describe it, as well as any alterations I'm making to the paint bars that will continue to create these consistencies. It's all good from that standpoint. As always, though, trade well, and I will certainly see you on Skype chat.